Very happy to have Mr. Nicolas Busch, founder and chief executive of the Navigate Group, to give us a few comments on leveraging commercial scale and logistics expertise. Nicolas, please.
Hi, thanks everyone. It's, as always, a fairly daunting prospect to talk in front of so many people, and, you know, they always get the crowds full here. The good news, I guess, for me as a speaker is I know what all of you want to know, and that is what and when to buy or sell. I never fail thinking that. The bad news is I'm not even going to address that topic. But we do touch it on the side. I was just looking at the program, the Marine Money program. You've got titles like Market Outlook, you have Market Fundamentals, Price Development, Market Outlook again, Finance Options, Finance Landscape, and is it time to get out of crude and into bulk? So I think it's clear that overwhelmingly in shipping, most of the attention is focused on when and what, usually to buy, sometimes to sell. But very little time is spent on how to operate and how to manage the investments we end up buying. And I would say that investors spend close to no time on the how, and for that matter, who will manage these investments and which companies are going to operate them and how they're going to get operated. And I think as a result, what we've discovered is the industry is plagued with inefficiencies from an operational standpoint. 80-90% of the time focused on one aspect, which is when and what to buy, and 10 to 20% on how to operate from an investor point of view. So we've dedicated most of our efforts throughout the years on that, how to operate, on reducing the inefficiencies in the market, how to run ships better. And in a way, ironically, focusing on those inefficiencies became probably for us, the best road to answer the question of when and what. But always, as a firm, our focus has been primarily on how to operate the ships and how to improve inefficiency. So I'm just going to give a very brief overview of how we address these issues and how we built the company on the back of that. I actually don't like standing behind the podium. I'm going to try. Does that work? Yeah. Okay. So the first thing we did when we first established in 2007 was to focus on the inefficiencies on the top line, on the revenue maximization aspects, and this is purely down to logistics. Trying to improve the logistics, you figure out that ship owners are mostly owning 5 to 10 ships. These ships trade globally around the world, hundreds of ports, hundreds of customers, and the lack of scale creates in itself huge inefficiencies. And as we grew the size and the critical size on the commercial side, we started to pay a bit more attention and get more interested on the cost side, where equally we found as many inefficiencies. So we focused on the last 4 or 5 years on the cost optimization of running the assets. So in that, we've built the firm today on 4 verticals, 4 pillars. The first one, the cost optimization, the revenue optimization, the commercial management, that's been the flagship for the company throughout the years. And then a few years in 2010-11, we started to focus on 2 main cost side, the bunker procurement for ship owners and for ourselves, and the technical management divisions, again, reducing downtimes, improving the cleaning, the turnaround, and all technical aspects, and reducing costs. And all 3 legs became critical for our expansion in 2012 and 13 into the asset management. And that asset management that came later in the day is where we spent the extra 10-20% of the time on what and when to invest in. So if you look at the commercial development, started in 2007, primarily on tankers, doing first products, then crude. End of 2009, beginning of 2010, we moved on to chemicals, and then progressively in 2012 into the dry bulk sector. And as we grew the fleet, we were able to expand the geographic presence and the offices. The commercial management has the first premise, which is maximizing revenues, and the easier way, that we have found to try and maximize revenues is increasing the laden to ballast ratio. So spend more time laden, less time on ballast. Now we use 3 main tools for that. First one is the information flow. And here is where scale becomes relevant. The more ships you have, the more information you start to gather from those ships, and then you start to get better at processing the information, you improve your IT skills, you improve your processing capabilities, and hopefully you make better decisions. Very linked to the information flow is the analysis and research, probably one of the few firms that employs 4 full-time research analysts on markets, and we've got analysts for every single pool trying to figure out how to improve efficiencies from a commercial standpoint. And the last one in this industry in particular is customer relationships. And again, scale works particularly well with customer relationships. You've got a multiple of customers. If you've got 4 to 5 ships, you will only see those customers once, twice a year from a business perspective. When you've got a lot of ships, you can forge relationships much closer, and you can actually expand geographically so that you can get to the information quicker, at least before your competitors. From a commercial standpoint, we start our day in Shanghai, where the office starts to gather information that passes on to Singapore to Dubai, Dubai to London, London to Houston, and by the time Houston closes, Shanghai is already open, and we constantly 24/7 pass the information from one office to the next one. The business itself runs from 13 different offices. We currently manage 320 ships. We do it on 3 segments, in tanker, chemicals, and bulk. We're currently working towards the offshore market as well. We hope that we can get the success there as well. And these ships operate in 17 different pools. From a management perspective, this vertical employs 250 people between back, middle, and front office, and it's become a very big operation where, from our perspective, scale has really helped us hone into not only the commercial efficiencies but the processing efficiencies, so that ship owners can put a ship into the pool or can give us an asset to look after, and all they need to do is once a month put a ledger into their accounts. We will deal with everything else. And the volume starts to speak for itself. When you get big volumes, you can get much more streamlined. We process on a weekly basis 3,000 cargoes. We fix 240 vessels per month, hundreds of market reports. We move over 150 commodities in a year globally. So these are big numbers that allow us to streamline the processes. We've got 11 lawyers sitting in London processing over 1,000 claims, and it's trying to create value for ship owners, not just from a decision point of view, but trying to make the payment process streamlined to try and get as much cash as you can out of the receivables. So by 2010, 2011, we started to feel more comfortable with where we were going with the pools, with the revenue maximization, and we started to figure out that there were probably as many inefficiencies from the cost side. So we started to focus more on how we could improve, with our experience, the leakage on the cost side. So the first side in 2010, our biggest concern was the bunker procurement. It was the biggest cost. It is, notoriously opaque as an industry, and the premise of the business for us was if we could actually get together with a number of ship owners and purchase in bulk, we would probably have better terms and probably better pricing. If that grew, then we could start to handle information the way we did on the commercial side of shipping, and we would be more efficient on the information flow, knowing which ports to go to, knowing availabilities, which suppliers. And then very importantly for us is to apply the know-how as an end user of the procurement and planning processes. And the discovery was very interesting because it was not, initially we focused on pricing, and then we discovered that the majority of the money was lost on the logistical efficiencies, which is something we've become better at throughout the years commercially. So when you look at the bunker procurement process, you can start looking at the fuel spec analysis, you can have claim support, barge mobilization, slop disposal. I mean, the list is endless of ways and areas where you can optimize the process to make it better for ship owners, to lose less time, to lose less money, to know what they're actually fueling. The business is now run from 11 offices. Globally, we cover hopefully all major markets from those offices. We started in 2011 with just about 100 clients. It was decent enough, but it was small. We were procuring bunkers for just under 1 million tons in a year. And by 2015, we've grew our client list to just over 1,100 clients. We've got an average growth of about 49 new customers per month, and we are arranging bunkers for about 5 million tons per year. So the system, the bulk purchasing, is obviously something that works quite well. It runs with 45 bunker traders globally. We supply vessels for 4,000 ships, but the relevant stats to me are the last two ones, the individual suppliers and country supplied. You've got 550 suppliers that we use. There are plenty more out there. Those are the ones we vetted, and we've bunkered in 105 different countries. So you can imagine when you've got 5 to 10 ships, it's virtually impossible to provide to yourself the vetting processes when you go to a country once a year or twice a year and you bunker over there. So in 2015, Integrate Fuels, which is the brand with which we bunker fuels, has stemmed bunkers every 2.2 hours every day of the year. This is something that in shipping works. This is where what we try to put emphasis in terms of the efficiencies in the shipping market, trying to find things that logically work, but in practice people haven't actually developed. The last one is technical management. Technical management was established actually before the commercial management. We established it 10 years ago, before we started Navigate. It comes from the F48 days, and it's always been at the core of the business. I mean, we focused initially mostly on the commercial side, but technical management has always been at the heart of allowing us first to look after our own assets when we invested, but mostly to make the decisions for pool points, evaluation of assets when they come into the pool, the vettings. And in 2012 and 13, it was the cornerstone to develop what later became the asset management side of the business. On the asset management, we embarked on an extensive new building program where the technical management worked on the design and development of the ships, carried forward all the supervision of the assets, and is currently providing services outside of our investments and advisory for specific projects for ship owners. The ship management fleet we have currently under management is of 27 vessels. Importantly for us, we do our own crewing. Again, historically we used to outsource it. We now do our own crewing. We find again a number of areas that we learn from and we can become more efficient at on the crewing side. They're all single nationality, they're all Indians. As you see, it's the size of the business that is of smallest scale, but it's one that is easily scalable. Over the last 2 to 3 years, what we have scaled though, on the back of that technical management team, has been the shipbuilding supervision. This has been on the back of our own requirements, but it's become one of the largest shipbuilding supervision teams of the world. We were supervising and have supervised over 90 new buildings in 11 shipyards in 4 countries, and we have a team of over 100 staff on the ground supervising vessels on a daily basis. Now, it's these 3 pillars and trying to find the areas that you can find efficiencies, not only within the area, but the linkage between each one of these areas, the relevance between the technical management and the commercial management, the technical management right from the word go when we're actually designing the vessels at the shipyards and watching them supervise is what has allowed us to then expand into asset management. And asset management actually started with us in about 2012, where we started to provide some advisory services for one-to-one investors on when they wanted to buy an asset, on evaluating the asset, identifying the asset, inspecting the asset, and primarily back then on structured time charters, allowing investors to invest not just on steel, but being able to go long or short time charter. In 2013, those services expanded to our own investments. We've established 3 investment vehicles where the team develops financial, legal, and secretarial advisory, and the wider group advises on asset supervision, inspection, and then commercial and technical management. So what we try to do, and this is a model that hopefully will work, we still think investors will, in the future, carry on obsessing on when and what to buy, but gradually we'll try to make it more efficient so that they can actually be sure that someone is looking at how. So from the asset owning platform, for example, we raised $1.25 billion of equity for the three companies. We've arranged $1.6 billion of financing with 9 financing bankers, and these are in 3 distinct platforms. The first one, there is Navigate Chemicals Tankers, which owns 37 large chemical carriers. In the middle is Navigate Product Tankers, that owns 27 new building LR1s and LR2s. And the third one was Navigate Crude Tankers, which merged then with General Maritime, and in 2015 listed as Generate Maritime in the New York Stock Exchange. So to wrap up, what I've put there is the BDI, which currently is giving a lot of pain to a lot of people. But you see from the BDI that the fortunes are made on when you invest and what you invest on. And our view is the investors are going to carry on looking at timing and the asset portfolio purchase as their main priority. But we need an industry that starts to focus more on the operational, on how to operate. And we can't expect investors to know that themselves, but investors will gradually, particularly if the markets become low for an extended period of time, will start to do their due diligence clearly on how to operate these assets and who can operate those assets on their behalf. The industry is clearly, from our perspective, very far away from being efficient. There is many, many ways in which the industry can become more efficient, and probably scale and the number of ships that the managers have under their control is the first step towards the efficiencies. So from our perspective, we would prefer and we would like to see an industry that focuses 80 to 90% on how to maximize revenues, how to reduce the cost. And once you get that sorted, you can spend 10% of your time understanding what to invest in and when. Thank you.